Well, welcome to the Wednesday's June 3rd New York AIM session pre-market or pre-silver bullet analysis. And yeah, right away we can see that we've taken the buy side liquidity one more time here after a very slow and sloppy run higher. Posted a high at 8 a.m. Made an attempt to run lower, but then at 9:30 one last time it poked the buy side and now rejecting very quickly. Taking the sell side liquidity here and possibly or likely still drawing down into the new day opening up there. Yeah, very reasonable price delivery here. The whole sell side liquidity still resides way lower, I mean here. So that's kind of what I'm thinking that we might be seeing, or what we might be using as a draw. We have SMT divergence on the highs between Nasdaq and ES. ES failed to make a higher high, and now it's surging towards those radical lows in here. Nasdaq has a little bit longer way to do so, to match that. Dollar index short-term strength, so aligns well with that. Right, so that's quite a significant amount of movement right away off the gate from the 9:30 open, which is 100% reasonable in here. The fact that it's covering so much ground and expanding so quickly is suggesting to me that the 10 to 11 might get a little bit squirrely. But yeah, we'll see what we get. This 9:34 was the first presented fair value gap for the opening range that started at 9:30. And delivered over 200 candles to the downside to the new day opening up from Tuesday, and it took out the sell side. So again, larger pool of sell side liquidity is still residing lower. New week opening up might be the next strong liquidity, but I'm a little bit concerned about how much movement, how much ground did we cover so far. But yeah, I'm assuming that as long as we are above these relative lows, I will use it or assume to use it as a potential draw on the downside. So yeah, we'll see what we get eventually. Fine. So now structure wise, we have this high here, this low here, and then it rallied to make a higher high, now quickly broken through that. So this last down candle prior to that happening is the potential bearish breaker in here on 15-minute. How does it look on 5-minute? Okay. That 5-minute fair value gap, that's a potential inversion fair value gap, is inside of this 15-minute bearish breaker, potential bearish breaker, which in my mind that should be a high probability bearish inversion fair value gap. Right, ES did sweep those radical lows but it left very smooth buy side, while Nasdaq has still its own relative lows that are very smooth open, and its own buy side is pretty jagged in here too. So yeah, now we are seeing some measure of retracement higher, and this area is my line in the sand, I would say, and I would not like to see price go past that if we are meant to continue with the potential downside, I suppose. But yeah, let's still wait for this 15-minute candle to close, and we'll see what we get at that time or at that point. Already retrading back into this breaker here, or this old area of order flow, where there was the last time that we saw buying on institutional basis. Why? Because it was a large down candle and then price went higher for a new highs. So they bought here, took it all the way higher, and then aggressively sold lower displacement. That's the signature that there was selling there. And now this is like a key area, key moment where we'll likely see whether this is likely to continue or not. I am assuming the fact that we enter the Wednesday post New York Open at the or on the or during the NFP week, NFP Friday week. So that might be harder to get a read on it. But yeah, I like how the bodies are staying inside the new opening up here on the 5-minute. That's a beautiful signature. And then it turned away and traded all the way up into this potential bearish inversion for value up here. So far offering premium sensitivity for the price. So yeah, we still have the new week opening up as like the lower hanging fruit type of objective on downside, I assume. But yeah, let's see. I'm definitely not interested in the buy side liquidity at the moment. So yeah, 5 minutes still to go. All right, so the tricky part about this is that we already moved quite a bit. We already delivered quite a price run lower in here. And we are now, or just now, gonna be going into the 10 a.m. to 11 a.m. silver bullet hour, which after this type of large opening range gap or opening range type of price swings, it is a little bit concerning for me to to have a high expectation of a very clean price action after all, because this type of rundown invites a lot of emotions, I would say. So they are definitely people who want to buy the dip, and there are definitely people who want to chase this drop lower. I personally believe that we still have way to go to the downside, and that's the side of the market that I'm siding with personally at the moment. And I don't really like anything on the upside, so I'm gonna stick with that, I suppose. But yeah, we'll see if it offers anything that makes a good sense though. So currently sell liquidity resides below the 950 low. And after we will, already we are establishing some near-term buy sell liquidity at the 953 high. So anyone who was short will feel the temptation to put their stop loss above this high, I assume, on a short. All right, going into the 10 a.m. in a second. For the record, we will be also having this high impact ISM services PMI number coming. So that might add a little bit of volatility to the mix of already quite volatile open or market open. So yep. All right, so 10 a.m. starting right now, and the news is hitting the marketplace. We are at the new day opening up here, slightly above it, and in between this 15-minute area of the order flow. 15-minute and 5-minute could not breach the new day opening up on a closing basis. And we have this potential breaker. That's bearish by nature, and that inversion for value gap inside of it. These are the two key levels that I like to offer some premium sensitivity. This large 15-minute SIBI, I would really prefer, or I would like to see this stay open. If we are indeed thinking about the relative lows here, this really should stay open, preferably. But alright, 10 a.m. is there. And on a very near-term, short-term basis, we are returning back to that 5-minute bearish inversion for value gap. So let's see how we can deal around it. And what are the ranges? The ranges are pretty big. So there are no real chances for a tight stop loss, I suppose, by any means. All right, there we go. So it are piercing the buy side liquidity above the short-term high. So anyone who was aggressive about trailing their stop loss above this is getting attacked. This is the 15-minute inefficiency here, that's SIBI, that preferably stays or should stay open. And this is the area where I would preferably see a reaction off of that. Okay, I feel like 5 micros allows me for a little bit more wiggle room, so to say. Hmm. Hello, money glitch. No, no, no. 1.7k is the drawdown left. Well, well, well. So yeah, I mean, the only idea that makes sense for me right now is this 5-minute bearish inversion for value gap, potentially send price lower. But the issue that I have with it is that we already dropped so much lower that it's becoming a little bit problematic. Plus, ES already took those radical lows, which, yeah, certainly that's somewhat of a divergence, while it has very clean radical highs at the same time. I don't see this as bullish by any means, but I don't necessarily see that I should jump on like blindly on a fair value gap like this, just because so yeah, let's see if I can get some further information confirmation type of idea off of that. So far we traded into it here on the 1 minute. The body stayed inside of it, even though the wicks were trying to poke outside. They couldn't really stand a chance. And now we are seeing some measure of reaction rejection off of that. So that's good. Potentially that's good for thinking lower prices. All right, well, it's ripping back into it and even closing above that 5 minute inversion fair value gap on 1 minute. And it's still very close to be poking into that 15-minute CB. Let me select 10-minute chart here. Yeah, I mean, on 10 minutes, we have this fair value gap right here that we are currently trading into. Well, let's see. Let's see. So yeah, after this large displacement here, now we are trading back inside the range. Tapping into the OTE levels in here, meaning premium levels at the same time, coupled with this mitigation block in here on 1 minute and this fair value gap right there, making short little highs that are being poked above little by little. So let's see if it offers any shorting opportunity slash turning point around here. See potential lower low for the day here. Well, kind of tricky situation, not gonna lie, but as I stated, I still prefer or stick with potential of lower prices for right now. All right, so I'll annotate this mitigation block in here. So that's a bearish mitigation block, high, low, lower high, price broke below it aggressively. And now we returned into it and into a premium also. So this is like a key area for price to make a potential turning point and go the other direction, if that's potentially in the cards in here. Right, it goes deeper and deeper into premium of this range. Taking lots of short-term highs along the way. Trading into this 15-minute CB. ES doing same, but ES took sell-side liquidity here, and it has left very clean buy-side liquidity at the other hand. So yeah, I mean, ES doesn't bode very well with continuation lower after all. Not that it can't, but yeah, Nasdaq is pushing through higher also. Dollar index is trading into its busy, and it has old high yet to clear out. Closing above the mitigation block here, body, the last piece of a premium array. This fair value gap here, and after all we have the first presented fair value gap for the morning session that was really pronounced, large, and it offered a price run already once. So if we can go back into it and respect the lower half, it could offer a price run again, I suppose. So I'm watching whether we can go there. So far, based on this price swing from high to low, we traded back to premium and traded through the premium rather convincingly without any issues, which makes me think that this high in here is potentially in danger at the moment. We'll see. Right, initial stopping at this last bearish survival gap inside of this price swing. The body is respecting the lower half, can't even close inside of the upper half. Only weeks were permitted. So we'll see, but yeah, this already looks like it went too deep into a premium to now turn. It could maybe. So we'll see, but this high at 940 looks a little bit suspect and or in danger of being potentially attacked. So yeah, we'll see. Not a problem. Not a problem if it wants to go for this high first. That's fine. Some measure of reaction off of this bearish survival gap, but quickly price came back into it. So that's not necessarily the signature I would like to see or look for. All right, so we made a turn at this survival gap here. If this is a more important, more salient type of turning point in here, I would really not like to see price come back into this bearish survival gap at this point. So I'm watching that closely. I'm watching that closely, but also this 5-minute fair value gap here, that's a little bit like a line in the sand that if it would be really bearish, price would need to like easily get below it and then use that resistance and then maybe something. But yeah, we got back inside of this fair value gap here already. And it really seems like this high is somewhat in danger of being ran out next. All right, and it left this range again after it traded to it. So now I would like to see price really pick up some speed on the downside because we booked already premium off of that range here. We have the larger range from this high to this low. That's also like a valid range to use. in that regard, we could see maybe a little bit deeper poke into premium, which could lead to take out this high there. So I guess we'll see what we get. This one was most impulsive and most like the quickest one off of this entire price action here. But yeah, we are already heading above this on a week basis. We're spending way too much time like this around it, so yeah, I don't necessarily like that. Well, I suppose this is somewhat of a difficult read at the moment. Hmm. Well, I think continuation higher is less likely at this particular moment, and some measure of run lower is still quite reasonable and viable to expect. The problem for me personally right now is that all of these candles are so fuzzy and overlapping, and also spending lots of time inside of this inefficiency, which makes me hesitant to engage the price at the moment. Yeah. Well, the buy set at 941 looks suspect at the moment, and it feels like it might want to go and grab that and into the first presented fair value gap, and that would be like the key area to watch and see whether we might get a setup out of it that makes sense. Well, me too, Ash. Me too. Right, finally, we are, looks like, moving outside of this little range in here, taking the buys liquidity one more time and trading up into this first presented fair value gap. That was a CB, a bearish fair value gap, as it formed, and it performed and it utilized the first utilization here. So I would assume that there is quite a chance, quite a probability that it might offer some measure of reaction out of it. And let me see if that makes any sense in terms of capturing a position by any means. Well, something like this would have been considerable, I would say. So first printed fair value gap, buy side taken premium, allowing for potential deeper run still. Dollar index potentially higher. So using this first presentation itself, that's kind of how it could look like. Because it is what it is, because it's an NFP week and it's Wednesday, I mean, it's the protocol already, I will wait and see whether we will offer any displacement away from this first presentation, and then if we do, that might allow me for something. This feels a little bit, I mean, this market environment, both ES and Nasdaq, feel a little bit wonky, a little bit tricky, a little bit suspect. And yeah, even though I like still lower, I like the sell side here. But I don't necessarily like to force that idea into a marketplace that isn't necessarily very convenient for that. But yeah, that's like one idea that's fairly reasonable, to expect this first presentation to offer somewhat of a response to the downside. So far we trade up into it, and the bodies cannot close outside of it on the downside. They are being kept. That's not necessarily a bearish signature in here. So that's a little bit suspect. Emo. Yeah, I mean, I see, Ash. I completely get it. Yeah, but sometimes price runs just too quickly, and yeah, if you stick to your rules, sometimes you're gonna miss trades, and that's always gonna be true. Always. I don't have a silver bullet for that, I suppose, but just go to the next one and execute properly, right? With your idea. That's the best you can do. Otherwise, you will end up chasing price, and that's not necessarily what you want to do, right? So let's add up a little bit of lipstick in here. So what was actually, or what is actually being utilized? The 944 bullish inversion for value gap being used here. Price went above this 942, and now bullish inversion for value gap. That's potentially in play, but we are also facing this first presentation. That's like the premium array for current time. I mean, we are leaving somewhat of relative equal highs in here that are, in my opinion, still rather suspect. Close below it again. So this should act as bearish reclaimed for value gap and send price lower easily. So yeah, we definitely are seeing some measure of a turning point happening in here. So let's see, trading below this low would activate a potential bearish breaker. If you could do so. So far we only traded down into this bullish inversion for value gap, and we're already reacting quite strongly higher off of that. Relative equal highs, buy side liquidity right here. So that's still a little bit of suspect smooth level. Hello Sonia, what's up? And yep, when it comes to ES, that's a struggle, but yeah, because it did took out the sell side here, because it has this clean buy side, but at the same time it's looking fairly weaker, way weaker. I don't know. All right, so we are back above this here again, and at this point I would likely expect the relative equal highs buy side to be potentially targeted. Well, I mean, I suppose that's a pretty difficult market to short at the moment, that's for sure. And definitely the run, the cleanest run was during the opening range. That was actually very clean. Buy side was taken, huge displacement, obvious first presentation, and delivered right to the point. Since then, we've been retracing higher and higher and higher and higher, spending some time inside of the premium of this high to low, quite a bit time. We engineered some relative equal highs buy side, and we are not following up well on the bearish PD race as it is for now. Yes, we are hanging around the low of the first presentation, but we already moved once away from it, and it failed to even take this low here. So that's not necessarily what I want to see. We are heading up into it again here, but now we have the relative equal highs buy side very close in proximity. So that's definitely where lots of orders are resting at the moment. And looks like they might be engaged. Well. Well, we are placing even more relative equal highs currently here. ES is still being kind of like weak and just meandering around. It's 15-minute SIB. It can't even reach the consecutive encroachment, which is kind of weak, while Nasdaq already is banging above it, above the high of it, approaching these highs rather smoothly. Okay. All right, so we got tagged the buy side, hold high. Inside of that premium first presentation, in my opinion, that's like the moment or the area in time and price where I would anticipate it to potentially turn around. I'm not sure if I'm on the same page But yeah, we've taken the buy side here, so that's a potential turtle soup scenario. Very shallow run so far, but if that's the case, we would like to see a measure of displacement to the downside now. All right, so let's see, that's looking promising in here. A little measure of displacement, taking a short-term low, like here. So now I'm watching the 1045 whether it leaves a portion of this inefficient and or imbalanced. But yeah, inside of this inversion fair value gap here, there formed a busy, a bullish fair value gap also, which we traded into. Hmm. Yeah, I mean, this already looks like a very, very hard market to short at the moment. At the same time, going long here, it's looking pretty terrible too. I mean, there is a very small, tiny inefficiency that they left here that I'm watching, that we are working somewhat off of. And we have relatively lows here as a potential draw, let's say. So I guess 25 handles risk above this high, uh, running towards these relatively lows for 50. Handles maybe could have been like somewhat of an idea, but all right, I'm watching if we can close below it. We can. So this should be reclaimed bearish, and this should be an actual inversion now. Let's see. Well, let's see. If it takes those radical lows before giving me any entry, then I should be certainly out. All right, cancel. It didn't give me. I mean, I was too slow. I was too slow here. Well, so we delivered the run on those radical lows here into this inversion for value gap back again. To me, it looks still kind of suspect. The ES looks very suspect in terms of its potential to potentially run the buy side or run higher. So clearly it seems to have like a little bit more potential inside of that little pair, but yeah. We have this inversion for value gap here, the last one before the sell side was taken. We traded to it here nicely. Let me see. This is the inversion consecutive encroachment booked. Radical highs, buy side, buy side. Some business to do for sure. Right, something like this sounds reasonable for me. Something like this sounds reasonable. Because the buy side here is kind of too smooth. It tried to turn around, dropped into a discount rate, respected it perfectly in the upper half. I like that a lot. And I would expect it to match some buy side liquidity here. And that's like a setup that makes sense to me completely, but yeah, we'll see. We'll see if it will get me in or not. All right, so 4 more minutes left. I guess, I mean, it's reasonably close to give me an entry here. There is a chance that I might not get filled. Let's see. I would really like to get this fill particularly. Why? Because, yeah, I mean, there is no necessarily a fair value gap here, right? But there is this volume imbalance. And inside of it, there are two relative equal lows on 1 minute. So that's like a fair value, I would say. If the idea is correct, that would be like a fair value. So I got tagged in, and now we'll see. Now we'll see what we get. This is not max leverage, max risk. Due to the conditions, due to the NFP protocol weak, so I'm risking less. But the idea of running the buy side liquidity here off of this inversion for value gap makes sense to me. So now we'll see though. So I like how the price closed right at the high of this inversion for value gap. We've taken relative equal lows. We closed at the high, so it should give us a jump higher, I suppose. All right, so the buy side here is basically my break-even price here. That'll be 75% of this position. If we can get to the buy side here, those relative equal highs, then I can go to break even with the stop loss and have a look at the limit. So far so good. We traded down to this inversion for value gap, respected the high with the bodies perfectly, and now we are turning and moving away. So that's all great signatures that I like to see. So quickly running through this short-term high should really just make this a good alignment with the price. I like this jump. So we got this short-term high, that's great. And now preferably we see a close above it and or larger range above it. All right, doji indecisive candle like this with a long wick to the upside. very important to see it just eaten up to the upside, like quickly. That would be like a sign or a good sign that I'm on side with this position here. So far so good. I like how we closed above the consecutive encroachment of this premium week. I like to see that. Now let's see if we can pick up some speed to the upside. All right, price wicked below the consecutive encroachment, but it closed very near to it. So that's fair enough. Let's see what this candle can provide here in terms of any upside potential. There is this small little volume imbalance right here with this volume imbalance right here. So there is somewhat like a suspension block, but preferably I really would like to see this stay as a breakaway gap and not even trade to it. But let's see. All right, that's very good. Expanding further above this consecutive encroachment, that's awesome to see. And there is a small little inefficiency right here. That's a premium, that's a bearish for value gap. And I want to see price go through it and use it as inversion rather smoothly. So let's see. So far we opened, we traded down into the consecutive encroachment and little reaction off of that. Preferably the body should stay above it. But we'll see what we'll get nonetheless. Right, so looks like we are going to seek that little suspension block here. And if that's the case, I want to see a nice reaction off of that. Discount array, so let's see. Right, extending deeper to that inversion for value gap, closing exactly at the high of it. So really, a rejection higher would be very, very welcome at this moment. Otherwise, as long as we are not breaching the consecutive encroachment, everything remains theoretically in place, or in place. So we'll see. Well, let's see. I still like how the bodies are respecting the high of this inversion fair value gap. Just now we are making an attempt to trade into it. So let's see if the upper half to consecutive encroachment can reject price to the upside. That would be ideal. And it really would need to be, or it would be expected to speed up in here. Otherwise, I might just get chopped out a little bit. So yeah, I've taken short-term low in here. My initial entry came back. So anyone who trailed stop loss to break even after we've taken this short-term high got just cleared out. And now we could, or we should start moving aggressively higher. Otherwise, the more time we spend here, the worse it will get, I assume. So still, I would give it like a couple more minutes to start working, and if it doesn't, then I might be cutting the bait. I like this response off of that. That's very nice. So this bearish fair value gap here should get traded above rather easily or quickly at this point, and this higher one also. So if we could like smash right on through them, both this one and this one, that would be very, very like a positive sign that it should be marching for the buy side here and the objective. Let's see. Right now, I mean, I'm having higher expectations of that run to go higher actually, because we just had a stop run on the sell side. We traded below those relatively cool lows on a very small scale, but still, that was a run on stops. Upper half of this inversion is still being respected. Price trade 1, 2, 3, 4 moved away, and now it has yet some business to clear out the buy side here. That's just too clean, too smooth, and too easy to reach up into, I assume. All right, that's very good. And now large candles to the upside. I like this close above this consecutive encroachment of that premium wick, and also this bearish fair value gap, which now should turn into a bullish inversion fair value gap. The next one is up here, so that's what I want to see done next. So this should now offer support, so discount sensitivity. Why this one is also likely to become a bullish inversion fair value gap? Because that's the last inefficiency before running this short-term low sell side. So now as we go above it on a closing basis, it should act as a bullish inversion fair value gap and send price higher. Also with the context of this upper half being respected very nicely of this larger inversion here, and with the context of having those relative equal highs buy side very smooth and close to the price, all of that makes that idea like pretty reasonable or expectable, I would say. If we fail in here and take out this low, that makes it really problematic, I would say, because we are already spending quite a bit time in here just banging around. That was a good reason for the price to start moving. It didn't. I mean, it started. It's still kind of like in the phase that we could see it start moving, but yeah, let's see. All right, so it failed to act as a bullish inversion for value gap after it closed above it. It couldn't support price as it was supposed to on the initial drop down, touching the high of that larger inversion for value gap here again, and it needs to quickly reject, like very quickly. Also, relative equal highs are being set in place here, so this is really we are running on short on time. I would say if it's good, it should really be expanding. All right, still hanging at the high of this bullish inversion for value gap here. And I think I'm giving it like a last chance to really deliver or start delivering here. Right, so looks like we might be performing another stop run of a stop run here, or close to do so. still having those relative equal highs on a very short term base or scale. And this, in my opinion, would be like the trigger for the price. So if we take those relative equal highs, price needs to keep on going or keep displacing higher. If it will do it, take those equal highs, I will then trim the stop loss higher, because that will be a key area where it should then really like explode to the upside. Otherwise, couple more minutes left. If it's not performing, I will be cutting bait, and yeah, that's it. But let's see. We are setting up another attempt to trade higher here. So let's see if we can get above this potential bullish inversion for value gap. And those relative equal highs here are really they should act as a speed bump, right? So if price could or should approach them, it should really like completely take off to the upside. If it's not gonna be doing this anytime soon, then I might be just wrong and getting chopped out in a unfavorable market condition. So therefore, I would assume I would be prompt to get out of it. But so yeah, I suppose this is a price action saying welcome to the pre-NFP trading, and that's usually how it goes during that time of week, the time of month, that week of month. Yeah, let's see. I'm watching this fair value gap closely, whether we can jump above it and use it as a potential bullish inversion. And then from here, there is really not much range to those relative equal highs, so it should quickly be jumping to and through that. And then if it's good, it should just keep on going. But again, a couple more minutes, and if it doesn't perform anything, I'm not willing to spend who knows how much time with it. Right, relative equal lows in here. And probably like the last chance for it to perform. All right, so we swept those relative equal lows, and now the opposite should happen to those relative equal highs. So I mean, the opposite I expect. It should quickly reject those relative equal lows, and I don't want to see extended run through those. Yeah, booking the consecutive encroachment. We could stop to the lower half of the inversion for value gap here, but preferably only on a weak basis and then reject higher. Otherwise, the probabilities fall significantly against me here. So yeah, I don't like how large and pronounced this is against me. Yeah, this looks like a stop out here. Touch the low, and that's like the last chance for the price to run or reject. Let's see. Right, so we touched the low with the wick, but the bodies were not allowed. Bodies were not permitted to book the low actually, or on the low. And now we've cleared all the sell side liquidity on the short-term basis here. Booking the low one more time, and now it should reject very strongly higher. If it's actually good, leave this inversion and just smurf right on through all of this price action here, leaving this low intact. Otherwise my stop loss is in place, and I'll be glad taking it. Looks very nasty in here. Romancing with the stop loss. The body's not closing below, that's a good signature, but now rejection. how many evals do I have in terms of like how many I want to take for the series. I don't know, this is the first one still. Fourth week of trading the first eval, and that's how it's going. I assume like 3 would be a good number to give like 3 attempts to pass an eval. And yeah, that's like how much I would like to take with this series. All right, a very nice reaction here off of that low of the inversion. The body respected that, and now price is moving away. So this is it. This is the signature that I was looking for. And now if it's good, it should really like aggressively roll through the buy set here and send us to the promised land. So we'll see. We'll see, but yeah, it should not be going below this low again. If it does, then I'm definitely getting stopped. All right, so all the business on the downside in terms of doing damage to the sell side was really done by now. Therefore, price is or should be completely free to move higher if it's actually gonna do so. There is really nothing else it needs to do at the moment. So leaving this range with some large candles would be ideal, I suppose. All right, so we are entering the 11:30. This is the launch macro for the New York session. This is a little bit of an extended hold, not gonna lie. But taking in consideration that since the morning session 9:30, we moved lower altogether, the launch macro buy sell liquidity is here. We already did the damage on the sell side, and price respected this bullish inversion for value gap with the bodies, which suggests that the order flow is actually bullish on the bullish side, which means we should see a quick low resistance type of liquidity run on the buy sell liquidity here and some above, right? A little bit above. That's at least reasonable expectation in my opinion, in my mind at this moment. Because we already did the work inside the lower half of this inversion, it was respected. Now the upper half really needs to be the support for price. It should not pass into the lower half. If it does, then I'm probably wrong about the idea. So yeah, what I want to allow is a touch or come back into this inversion here one more time. As we went outside of it, now we can drop into it again here, but the upper half needs to really send price higher, and I'm literally like setting up a deadline for the price to do so. So I'm giving it like until 11:40. If it trades into it and doesn't move, I'll be cutting the trade and just you know, taking what it is. But yeah, trading into it makes complete sense. But now it really needs to move away. That's what I would expect, at least. All right, kissing the consecutive encroachment, that needs to be defended. The lower half needs to be defended now. I don't want to see any closing prices in the lower half, because if that's the case, then this is not a valid idea anymore. Then this deep dive into it will be all fine if we can reclaim or like regain the ground with a wick and close in the upper half. 3 more seconds, 2 more seconds, 1 more second. We did close below consecutive encroachment. That's not ideal. That's definitely not ideal. So yeah, but as I said, 11:40, if it doesn't move away from here, I'm out. Or I get stopped earlier. We'll see. So yeah, the only reason why this close below would be like any permissible is taking into consideration all of this rather sloppy price action in here so far. So if it's already like sloppy like this, you gotta kind of have, sometimes you gotta like permiss a little bit of imperfection here and there. This could still work out if we can move away from this area and reject that quickly to the upside. And that's mainly what I'm looking for, really. But literally 3 more minutes, and if you are not leaving this inversion fair value gap, then that's not what I want to spend more time on, I think. So yeah, time is ticking. All right, so fair enough, I suppose. Fair enough. Got me out there on the stop. And yeah, that's it. This is done. This one is done for today. I'm glad I used lower risk parameters instead of using full leverage, so that's good. Other than that, it was really like a sloppy price action after all, I think. So yeah, it is what it is. Fine. So I'll be back tomorrow, next loan open session. Thanks for watching, and see you guys tomorrow.